Welcome to the Brent Bruce Daily for January the 17th. Today is Tuesday. Yesterday, the bond market was closed, so we did not have a report in recognition of the holiday yesterday. So we're going to take a look and see what's been happening over the long weekend. Now, if you remember last week, we did get a consumer price index report that came out showing inflation subsiding, but not quite as much as we had hoped for. It came in line with what the markets in general were expecting, but not the little bit stronger reduction that we were hoping for. Now, over the last few days, that report has been digested. And looking further into that report, we found that one of the components didn't really come down as much as we expected it to. So in this consumer price index, there's a list of items that are priced out. And we kind of look at it like a shopping cart or a basket of goods that get priced out each month. And then we see if the prices went up or down, and that is how we compile the consumer price index report. Within that report is what they would consider housing. So that's the housing component, rents and mortgage costs, things like that. Now, we were surprised to see that housing didn't come down much. And that kind of held that consumer price index number higher than, again, we had hoped it would be. Came in at 0.3 month over month. We had hoped it would come in at 0.2 month over month. What's interesting, though, is that it doesn't seem that housing is going up right now as far as the monthly cost. The rents and the mortgages don't seem to be going up. They've gone up, but it doesn't seem that they're going up month over month right now. They seem to have stabilized, and rents may even start to be showing a decrease here in the coming days and coming reports. That's what we're seeing. So it was a little bit of a surprise to see that component did not show inflation coming down as much as we had expected. So let's take a look and see how the market is responding. Right now, we are down 21 or down 19 basis points. The market is closed for the day. It is now 4:07 p.m. Central Time, so the market is closed. That's where we're going to end for the day. The 10-year Treasury is up 1. So the 10-year really didn't go up very much. The mortgage-backed security, it is down. Let's see how far it went. Now, you can see here that we bounced off of this floor of support at the 25-day moving average, and we're still kind of floating in between this ceiling and this floor, which we have been for a few days. Now, tomorrow, we're going to get the PPI report. So that's the Producer Price Index, which measures inflation on a producer level. So we've talked about before that this is a little different in that if you're looking at a basket of goods, so a basket of items in the PPI report, in the CPI report, which is a consumer price index, and it's the same kind of thing on the personal consumption expenditures report. It's a basket of goods that are being priced out. When you look at the producer price index, it's more of how much did it cost to manufacture the items that are within that basket. So it's one layer removed. So I always talk about if a Snickers bar, candy bar is in the basket of goods that makes up the consumer price index and the personal consumption expenditures reports, the producer price index is something that prices out the chocolate that is used to make that Snickers bar. Okay, so it's one level removed. So when we look at the 4 items, I talk about the 3, but there's really 4 items that we look at when we're talking about what we expect home loan interest rates to do. Number 1, we're looking at the federal funds rate. Number 2, we're looking at the personal consumption expenditure. Number 3 is the consumer price index. And then the 4th is this PPI, this producer price index, that isn't looked at quite as much, but we definitely are looking for indicators right now to decide whether we're going to go up and break through that ceiling of resistance or fall through the floor of support that we're at right now. So that's what I'm talking about when I look at these numbers here. And maybe the PPI will push us one direction or the other. So let's take a look here again. We're down 19 basis points. Where are home loan interest rates today? So let's go back into the Brent Bruce Daily home loan scenario that we look at, the well-qualified conventional 30-year fixed right here. This is a very well-qualified 30-year fixed conventional loan. We were at 5.999. I think we ended last week. Right now we're at 6.125. So it makes sense that we're having a down day of 19 basis points and we're coming in at 6.125. Let's not look at Flagstar. They don't have quite as good a pricing when it comes to the buy down. So if we go in here, 5.999%, if you wanted to buy that, is going to cost $994. So about a quarter of a point to get to that 5.999. So let's open up here for compliance perspective. Here we're going to show our parameters here for the home loan scenario that we just priced out. So guys, we are very close to the 5 still. Okay, so 5.999 is costing a quarter of a point. Usually the seller is more than willing to pay a quarter of a point in today's market when houses aren't quite moving as quickly as they were previously. We're going to take a look and see what the PPI report gives us tomorrow. And the next big report is the personal consumption expenditure. Okay, so that was number 2 on the list that I gave you, is coming out January 27th. So that will be the next time we have a big report that comes out, which could be tremendously market moving one way or the other. And then the number one factor that we're looking at is the federal funds rate movements, which is going to be coming out February the 2nd. So that is what we have to come. Let me know your questions, thoughts. If you have anything you would like for me to talk more about, let me know. Make sure that you like, subscribe, and share, and I will see you again tomorrow.